Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, the ISM manufacturing numbers came out, was not pretty. We're going to talk about what that means and where this market is headed. Let's dive in.
Trade Genius.
All right, Bob, so we got back from the 3-day weekend and no follow through from Friday, another red day. Algo's freaked out about the manufacturing data down 5 consecutive months in a row. What do you think is in store for this market?
Yeah, and before that, the BOJ came out and said they may have to raise interest rates. So we started selling from Europe Open, and we never stopped selling all day long. So now we have to wonder if this is the boys are back in town, and do we get a turnaround Tuesday, Wednesday edition tomorrow? If not, typically, we may have to now wait because we have the unemployment report on Friday. So if the unemployment report comes in weak on Friday, then people are going to start saying, hey, maybe the Fed's going to cut 50 basis points or maybe a whole 100 points and try to get a lift for the market. But, at this point, Phil, the runaway move is seeming a bit distant at the moment. Here's the problem is the volatility each day is going to be different. And it's going to cause a lot of turmoil. It's down today. I wouldn't be shocked tomorrow if we get a bounce just to get people goofy footed again and have it go back down again. But typically when you get a big move down like we had today, Phil, it's usually an inside day. But if it carries through, and I'll let you speak in a second on that, we may fall all the way down to the 9 weekly EMA, which is another dump. But before we get to that, let me show you the manufacturing numbers. Okay, guys, this is not good. Okay, we told you before, the semis don't like these rate cuts, and the ISM is contracting like crazy. And it's not just America, too. I mean, China is in a world of hurt right now. Germany is shutting manufacturing plants down and sending them to the U.S., Phil. And that tells you something that we can't get positive manufacturing when manufacturers are actually even coming into the country. So I think the recession is confirmed in my view. It's been confirmed for a long time in my view. And this is why this next chart. People who are unemployed do not buy things, Phil. I don't think I need a PhD in economics to figure that out. When you're broke, you don't buy things. And I think we're just in the beginning of a really nasty cycle. I think Friday after we did our weekend podcast, Phil, Goldman Sachs came out and they're laying off 1,300 people. Now Goldman Sachs is the tip of the iceberg. If they think happy days are here again, they'd be hiring, but they're laying off 1,300 people. These jobs are minimum 50 to 100K a year jobs. Can you imagine, Phil, you're living in New York City, just barely getting by, and you get the notification, you're getting your job whacked, you make $100,000 a year, and you just released your apartment. I mean, this is what people are going to start going through. It's going to get really, really, really ugly really fast. But I'm going to throw it over to you because you said there might be a short-term silver lining here before we auger into the ground.
Yeah, so again, I think bigger picture, we're seeing the data that we expected to see, right, Bob, going into what would be a prolonged recession into next year. So this isn't so much of a surprise. I think that what I was looking for, and we're still open to that, is that you have this draw into something like a rate cut, but it's a sell the news event. Otherwise, if we don't get any lift this week, and we definitely don't get a lift next week, then it could be a sell the rumor by the news type of deal. That's not real typical for what we see in the markets when we go into a rate cut though. So if we don't get a lift tomorrow, that triggers my 2 consecutive daily closes under a daily 9 EMA. And that typically will see more follow through. On a short week, that tells me expect to be down into the Friday candle. Now you might get a bounce on Friday at some point, but that somewhere in that Friday candle, you're going to see a low for the week put in, and then we can lift up. If we get that, I do think that's bullish for next week. And seasonally, you can get a pretty strong move up into the second week of September. So it's still not, we're still not out of the woods in terms of whether or not we get a move up into the rate cut. That can still happen, but we are going to need to see, if we're down this week, we're going to have to see that bounce manifest at the beginning of next week. So otherwise, what happens is that all of the seasonals, whether it's election year, non-election year, strong Q1, whatever, they're all down into the middle of October, basically, which sets up the pre-election rally, right? So that's the most consistent seasonality that we have. So ideally, Bob, we can be down this week. If we are, though, you want to see a bounce next week. Otherwise, things can get really ugly. I'm talking like we could dip below 5,000 on the SPX and going into that middle of October area, which then that's your last hurrah. if you don't rally out of the middle of October into that election, or even beyond that election, I'm open to that too. If you don't get that move, then we have seen the top. All we did was put in a lower high, which is something that you have to be aware of, right? In this area, is that we only put in a lower high, and we've basically already started the bear market then, right? The high is in. All we have to look forward to is lower lows and lower highs for a pretty long time.
Hey everybody, it's Bob at Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. You know, we have chat room, we have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com, check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. Hey, look, if Japan raises interest rates and we lower interest rates, that is the reverse carry trade. It's called carry you out in a stretcher trade. So you have to be really careful. And also, look, we have geopolitical stuff going on, but we have a local political event too. I think on the 18th is scheduled for sentencing for the Trump. And, you know, if that judge remands him into prison, you know, all kinds of chaos can ensue from that too. So, you know, we try not to be political here on the show, but that would affect the markets, I would think, bigly. Not even just the market, it would affect the economy, you know, big time. So as Trump would say, bigly. And so just have to bear that in mind. And so I think caution is warranted. One thing I will say, Phil, is the pair trades that we put on for people, well, we should suggest we don't do them for you, is that they're just not seeing the mess. You know, even Steven, I think we have it wired pretty good, maybe get slightly more bearish after the Fed meeting and just collect these super high premiums that are coming in with the vol popping like this. So, I mean, we had a 30, almost 40% move up higher in VIX today. You know, that's pretty intense. And I think what's happening here is that we have so much now option trading going on. I didn't see VIX moves like this, you know, unless it was some systemic, you know, like COVID and great financial crisis, but just out of the blue now with Japan, twice now when Japan talked about raising rates or doing a rate raise, the volatility of this market absolutely exploded. So I think Japan is the key to market success at this point, and we're just gonna have to watch that because that's pretty scary stuff. You know, and then they backed off, Phil. See vol collapse right away too. So I think we're really now not in control of our own markets.
Yeah, another point too I'll make is we hit the 50-day moving average on the S&P ES and also the weekly 9. So we do have some big moving averages here that we hit on the futures. So we could see a bounce. Now, what might happen is we could see a bounce overnight into the JOLTS job openings tomorrow, but maybe the JOLTS job openings, that's a wild card. If it's good, if it's favorable, and we get, I think they're expecting 8.09 million job openings. If we miss that, maybe we see more downside. If it beats, then we could have maybe more of a reprieve tomorrow. So we do have a significant pullback spot here that we could see a short-term bounce in. But with this week, every morning we have numbers coming out, right? It's a very data-intensive week. So it's really kind of like day-to-day. But once we finish the week off, we can kind of let the dust settle and see where we're at. And like I said, hopefully we get a little bit of a bounce next week. Otherwise, if not, guys, Bob's right. You have to be very careful here. A lot of downside, and those pair trades are nice, right? Because you collect premiums on both sides and don't really care too much how the market behaves because you're kind of neutrally positioned for that.
And guess what else was up today, Phil?
What?
TLT. We told you guys it better be in your portfolio.
Yeah.
And I think we get to the 18th, SARK should be in your portfolio. I haven't bought any yet, but I'm fixing to, as they like to say in the South.
Yeah. So, you know, in terms of like, is this it? I want to see the yield curve uninvert, right? I want to see it get to 0.6, and I want to see the TLT/SPX chart really start to crack up and break out of that weekly downtrend line that's there. You get those two things, then I think we really have to talk seriously about being in a bear market and not so much speculating whether it's turning. I think at that point it's turned. So then we get really defensive and we talk about the conversation shifts about how do you position yourself for a long-term bear market, because I think that's what those data points are going to confirm for us. So for me, Bob, that's what I'm really looking forward to. And even if we get to those levels, we could be down quite a bit we could be under the weekly 9, right? We could be trending under the daily 9 for a while, so that the initial move has begun, and then we get that confirmation, right? And then we know what we're dealing with.
Yeah, so guys, interesting times. So strap in. It's going to get really, really fun. So with that, guys, we'll catch you tomorrow. And, if you have any suggestions of stuff you want us to talk about, we're all ears. But I think there's going to be enough news here to carry us for the weeks to come. But we always we do this for you. So let us know if you want to talk about anything specific. Thanks. Talk to you later.
Trade Genius.